Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, President Trump says more chip tariffs are coming soon. This is the administration explores equipping chips with location tracking tech. We'll have the latest from Washington.
Plus, booming AI demand is sending Palantir's second quarter revenue soaring above $1 billion. Shares hit a new record.
And AMD also out of earnings after market close today, with the company under pressure to show benefits from the AI race.
And we take a check on the markets amid what is yet more earnings to come from AMD and a digestion of weaker services data that seems to be putting up pressure. The macro picture is underwhelming. We're off by 0.5% on NASDAQ 100. But Ed, get to the nitty-gritty. What's moving in terms of points here?
Yeah, the earnings story is Palantir, and we're up 8 percentage points. 48% growth on the top line, which the company attributes to astonishing AI contribution. We're going to get deeper into that in the program. Another top story that we're tracking is what's happening with AI chips in particular. So we're going to talk about how tariffs are coming specifically for semiconductors, but then there's the reporting overnight that the US is thinking about putting location trackers on AI chips that are exported to certain countries. In fact, overnight we caught up with a key White House official who talked about it. Listen to this.
There is discussion around very important research and development that needs to be done on potentially the types of software or even physical changes you could make to the chips themselves to do better location tracking. And that's something that we're exploring and we explicitly included in the plan.
We can get to all of this with Bloomberg's Mike Shepard, who's joining us now from Washington. Look, I want to go into the broader picture first and foremost. We are anticipating semiconductors to be in the eye of the storm when it comes to localized tariffs. How much is that impacting the future of companies wanting to import?
Well, that's a great question, Carol, because the administration, while it has spared chips imports from the country-by-country tariffs, we are now expecting Donald Trump to sign an order in the next week or so, putting tariffs on semiconductors as a category no matter the point of origin. And the countries will have to negotiate individual levels perhaps after that. But they have made clear that just like with pharmaceuticals and autos and copper and so many other categories of goods, they want to see more of them produced here in the U.S. And they see tariffs as a great means of doing so. Now, what this means is that industries such as automakers and even the chip plants themselves will face higher costs. And then when you look at the hyperscalers, OpenAI, and the companies that we've seen report their earnings this week and announce even further intentions of expanding their investment in artificial intelligence, they run the risk of facing higher costs on those too from chips. Chips are one of the biggest inputs that these hyperscalers face in terms of cost, and adding to that, adding up to a 25% tariff would be tricky. Now, we've been anticipating this since April when the Commerce Department opened its investigation into whether tariffs were called for. It's under a so-called 232 process. It would be on sounder legal ground than the reciprocal country-by-country tariffs. We will have to see what the timing looks like and whether or not they carve out any exemptions as well, including for semiconductor manufacturing equipment, which is key to expanding here in the U.S. as well.
Mike, location tracking, we have the United States willing to export technology, the American tech stack around the world, but it wants to track where the chips are going. Can you explain that one to us?
Yes, Ed, and it really is central to the administration's plan to try to expand the American tech stack, especially advanced AI chips. They want to be able to sell those more broadly and more widely, including even into the Chinese market. We saw the promise to loosen restrictions on those H20 chips. But it's more than just China. It's being able to sell those semiconductors across the Middle East. We saw all the deals that were reached with the United Arab Emirates and in Saudi Arabia. But to be able to sell in those markets, the U.S. wants to also have the capability of tracking those chips to ensure that they are not somehow diverted or smuggled or resold or somehow end up in the wrong hands. And that would include not only China, but Russia and Iran, adversaries that the U.S. does not want to see gain capability when it comes to artificial intelligence, which, of course, as we know, has a dual use capability.
Mike Shepard, always on the nose. We thank you from Washington. Meanwhile, Taiwanese prosecutors, well, they've arrested 6 people suspected of stealing trade secrets from TSMC. Now, the chipmaker reported former and current staff to authorities on suspicion they illegally obtained core technology. The prosecutors searching the homes of some staff. Now, authorities are now trying to find out if data had been leaked to other parties, Ed.
Okay, on to earnings. Palantir reported a 48% increase in revenue for the second quarter to more than $1 billion. The company cited the, quote, astonishing impact of AI on its business. Bloomberg Intelligence senior analyst Mandeep Singh joins us now. This is the story that everyone's talking about this morning. Palantir's continued momentum. At BI, you went a little bit deeper on how that's playing out, but could you just summarize where they were strong and what's happening with Palantir right now?
Yeah, I mean, when you look at the U.S. commercial segment, that is what everyone is excited about. It grew 93% for the full year. Their guide is 85%. And look, for a small segment with over a $1.2 billion run rate, it's very impressive growth. But I think the metric that we still don't understand is how much is the AI contribution to their top line growth? I mean, when you look at a Microsoft Azure number, you know the AI contribution to growth is 17% when they grew 39%. In the case of Palantir, yes, they grew 48%, but we don't know how much of that is driven by AI because their business model is dependent on contract wins. And yes, they gave us a number around the backlog growth and the remaining deal value on the commercial side. But we just don't know enough to quantify that AI contribution. And for a company that's trading at such a rich valuation multiple, you want to have a better sense of, what that flow through of AI revenue is.
Okay, so perhaps more transparency on a breakdown of numbers, Mandeep. What about who they're taking market share from? Who's losing out as we see Palantir make these wins?
Yeah, their core business is data warehousing. So you have the legacy vendors like Teradata and Oracle. And you also have cloud companies like Snowflake and Databricks. And we know Databricks is also doing very well in terms of growth rates. So now that Palantir is expanding on the commercial side, it'll be interesting to see if they can sustain this kind of growth rates, because you're right, it will come at the expense of someone on the commercial side. Clearly, the hyperscalers are looking to get a piece of that pie as well, because Microsoft, the way it's positioning Copilot, it's trying to solve some of the use cases that Palantir is looking to solve by applying LLM. So to my mind, the commercial side growth, the sustainability of growth is going to determine whether it can sustain this valuation. And so far, I find the net new ARR metric from the hyperscalers far exceeds what Palantir has had it, given Palantir is a much smaller company.
Great context. Bloomberg Intelligence senior analyst Mandeep Singh, thank you so much. Look, let's dive into all of this, particularly into the valuation front. Stephanie Aliaga is with us, joining us from Global Market Strategy, JP Morgan's Asset Management Market Insights team. Stephanie, we look at something like Palantir, up 500% in 12 months. The most expensive stock on the S&P 500 when you're looking at where it prices versus future sales. Does it seem vindicated to you, these sorts of valuations?
There's absolutely some AI enthusiasm at play here. I think there's some. And I think in this earnings season, we have heard from a variety of companies, not just these mega cap tech companies, that they're seeing early signs of success with AI. AI is helping them run more efficiently. It's writing more and more of their code, something like 50% of code. And it's also helping them hit more shots on target, particularly in marketing. But beyond that, I think when it comes to valuations, you need to, on one end, look at the stability in the core business operations of some of these companies, these mega cap tech companies, which remain highly profitable, and then also some of the upside moving forward in the AI race. And when it comes to the leading mega cap tech companies, at least, we actually think valuations aren't as overstretched because core earnings are so robust and they are actively reinvesting a lot of those profits, that cash flow, into the next paradigm shift. And we're already seeing some early signs of success. These picks and shovels companies, they're also digging for gold and seeing the fruits of that.
Stephanie, when you were last with us in April, it was just after the sort of DeepSeek chaos. And we discussed how the semiconductor industry in particular was in the crosshairs of the administration. a lot has changed since then. Actually, the administration's been very supportive of exporting American technology. But just on the stories we touched on, tariffs on semiconductors and location tracking on chips, there's a risk premium there, is there?
Absolutely. Geopolitics remains a risk. Policy has been a headwind for this sector in recent months and particularly today. But we are seeing a shift from this administration towards a greater appreciation around what safeguarding U.S. dominance in AI really looks like.
Right.
And I will add, outside of these risks around tariffs, what is really promising and quite structural is that you have seen a decline in over 90% around the cost of inference for AI. And that has to do with 4 factors, HARD. Hardware, the chips themselves have been getting significantly more efficient. Algorithms are getting more efficient, how much data, how many numbers they need to crunch. We're right-sizing models. We now have mini models that we can access. And we've seen this democratization in models, particularly open source. So all of that has led to this pretty remarkable decline in the costs of AI, and I think we need to put that to one side when thinking about these risks for tariffs.
We shall borrow the acronym going forward. What I've wanted to ask you for a really long time, is there an America Inc. trade going on here, where you just say, I bet on these companies that are most likely to succeed if this American strategy pays off?
I think it's a really interesting point, particularly in the context of this debate around U.S. exceptionalism. Because when I look at the markets right now, I don't see so much U.S. exceptionalism, but exceptionalism from a few U.S. companies. And that is really what is driving the markets right now. We're actually less concerned about valuations for, let's say, the Magnificent Seven, and a bit more concerned about the other 493. Because without that structural tailwind when it comes to AI, it's a bit harder to see the cyclical tailwinds for the rest of the market. But when it comes to these leading tech companies, I think you do have unprecedented fundamentals and the continued dominance, particularly in tech services. Now, there's plenty for investors to consider, and we still think portfolios should be diversified. But at a time like this, you maybe don't want to be diversifying away from that epicenter of innovation.
Okay, so interesting that you got the acronym HARD. Hard tech is where everyone's looking at from a startup culture, but also into these big Magnificent Seven. But then drip feed it down into where, if you are going to diversify, the sectors that are deploying it right, or indeed is it more about the picks and shovels a little bit more? It's about the energy, it's about the infrastructure and that side of the equation that keeps you in the AI spin.
Absolutely. The AI value chain is continuing to expand. We think that infrastructure layer is huge, and that is a secular story that is still in its early innings. The amount of energy that we're going to need, the investment that we're going to need in a variety of different sources, and also everything that goes into those data centers themselves, the cooling equipment, the server technology, and so forth. So we still think there's a significant investment case there. But what's also really interesting, particularly what we're seeing in private markets this year, is this explosion of AI applications, the kind of applications that businesses are going to need, because it's not enough to give their workers ChatGPT. They need domain-specific AI applications that are actually productivity enhancing and show up in the bottom line. We're seeing more and more of those come to market this year, mostly in private markets, but I think that's a trend that is worth watching and just getting going.
And then they move from private markets into public markets, and we see what happened with Figma and the
Absolutely.
euphoria around that particular listing. Are you seeing more of your clients wanting to know about what IPOs to get into, or indeed how to make that move from private markets into public markets?
I think there's a lot of interest there, as there should be. I mean, there's a lot of anticipation for a pickup in IPO activity, and I think the fundamentals and the promise in a lot of those AI startups could be the thing that really gets enthusiasm and comfort going in the market again. But I also don't think that we're going to go back to that kind of post-pandemic period. A lot of these companies have different goals beyond just being profitable AI companies, right? Many of the LLM providers that are in private markets, they're on the race to AGI. And so there is also this appreciation that these AI companies can get a lot of the capital that they need in private markets. Maybe they want more control over their companies. So if you want to access that opportunity set, don't just wait for them to go public. I think you might want to look at your private market exposure and then also maybe some of those tactical opportunities that do arise this year.
Stephanie Aliaga of JP Morgan, great to have you back on the show. Thank you very much. Now, coming up, Joeof Farf, known for making early bets on companies like Alphabet and Amazon, while at T. Rowe Price, joins us to discuss his new role, head of growth for Eclipse, a VC firm. That's next. This is Bloomberg Tech. Investor Joeof Farf scaled T. Rowe Price's U.S. growth stock fund from $57 billion to over $150 billion in assets and had 20 years at the investment firm, making early bets on companies like Amazon, Alphabet, and Meta. He's now joining Eclipse, a VC firm focused on physical industries, as the head of growth and also as a partner. Joe's here with us in San Francisco. I've always known you to be somebody who is higher up the cap table of big companies that then go public. Rivian is the example that I know best. Late growth stage round, an anchor investor in what was a huge IPO in 2021. You've been lured to venture capital and Silicon Valley. Why?
Good to be with you, Ed. I appreciate it. I'd say, you've known me for a long time now, and I've been a builder of companies over time and invested capital in those companies as they've scaled. I think what really attracted me to Eclipse and opportunity is I really think we're at a seminal moment right now for physical industries. So if you look at the companies that have been created now, both private and public, and you look at the market caps, there's been significant interest in those, and there's capital formation around them. The other parts of this, I would say, all this is coming together at once is U.S. policy, which you talked about earlier in the segment. I think is very supportive of bringing industries back to the United States. And the other thing is clearly an inordinate amount of innovation around artificial general intelligence and ultimately artificial superintelligence, which I think provides this unique intersection of hardware and software to transform physical industries.
So the reindustrialization piece is something that comes up on this program all the time. There's a sort of national priority, national interest, even sort of national pride element to it. How are you going to play that in your strategy?
Look, I think it's important to talk about policy and ultimately national security and economic sovereignty, and it's very important. I think looking at the Eclipse team and why I joined them specifically, they've been doing this for 10 years and had a vision a decade ago, and it's an incredibly competent, amazing team. During my process, the time I spent with Lior and the rest of the partners, they're passionate. They're hungry. They're true builders. They roll up their sleeves. They get their hands dirty, and they've done a lot of early stage enterprises and companies where I come in. I've allocated capital at scale. I've looked at companies, both private and public, that have grown, and I've worked alongside, invested in many of the best companies in the world. So to do that as we scale these businesses and connect the two together with that team, their technical experience and my financial experience, I think is really like a 1 + 1 = 3 situation. They remind me, I'll date myself here, Ed, but it's a team of Jerry Maguires.
Not dating at all. It's an iconic movie. Joe, I'm interested, though, in just how you go from managing tens of billions to going to managing and writing relatively small checks. What sort of size check are you going to be giving, do you think, when you see these smaller scale companies that are going to be huge?
Yeah, well, I mean, initially, right, at the early stage or venture side of this, Caroline, you're going to see smaller check sizes, but we're going to scale those over time, both for companies as they hit escape velocity and they need more capital to continue to build out their strategies. And on top of that, there will be companies, as we've seen, that need bigger check sizes earlier and getting more traction. A good example of that is investment I made at both T. Rowe and we've made at Eclipse is Anduril. To give you an example.
And Anduril, I immediately think of just the focus from the government and indeed from many an investor right now. Just look what's happening in Point 72, for example, on getting in on defense tech in particular. But I'm interested in, are there particular areas where you think the US is leaning in more that you want to be contributing to? Thinking when you think of Redwood, I'm thinking about the supply chain more, but when you're thinking then about Tesla, it's more about robotics. Where are your sweet spots going to be, do you think?
Yeah, I've had a lot of experience in electric vehicles, material science, battery technology, but that's also extended, and I think it ties in with what Eclipse has done well: supply chain solutions, semiconductors. You mentioned defense tech, autonomy. So there's a lot of crossing of paths, given my experience that I've had as a private and public investor now as I join Eclipse.
Joe, you visited Tesla in 2011. You took Rivian public, basically, and then you helped them after going public. Just very quickly, what were the lessons you took from those two companies?
Yeah, well, I mean, I think one of the seminal moment for me on physical industries was in 2011 when I visited Tesla. It was not just a differentiated product, Ed, but at the end of the day, a different way of building, right? A first principle ways of thinking. And we see that permeating a lot of businesses. And as we've had successful companies like Tesla, SpaceX, I mentioned Anduril, Redwood, there's people leaving those firms and they're starting new firms as well. So the ecosystem is growing and they're taking those lessons they learned with them. Things that were really important to me and I think I can help businesses with, clearly product market fit is very important. Right product, right time, solving the right customer problem set or providing them something that they don't have. That's very important. I've always talked about additional acts beyond Act One. You look at Tesla, they've done that. SpaceX has done that. Amazon's done that. So a handful of those. And then really what we focused on growth for many years is driving durable growth and making sure companies are sustainable longer term. So I'll be working with most of them to scale and ultimately get them to be durable public companies.
Joe Farf on his second act, Eclipse partner and head of growth. Thank you very much. Now, coming up, Abu Dhabi's MGX gets ready to raise billions for its own AI ambitions. We'll get more on that story next. This is Bloomberg Tech.
It's time now for Talking Tech. And first up, Abu Dhabi-based MGX is said to be considering plans to raise billions of dollars as it ramps up investments in AI. That's according to sources. The firm, it plans to raise money through a fund structure and could raise as much as $25 billion. Now, this is as executives are weighing raising money from investors in Abu Dhabi, but also beyond. Plus, NVIDIA's assembly partner, Hyde, it actually saw sales growth slow in July, a signal that tariff-induced uncertainty is affecting electronics demand. Still, the company hopes to ride that wave of continued AI spending from its partners, even expanding its AI server assembly capacity in the United States. And shares of German chipmaker Infineon, well, they're rising today after the company said that tariff impact on its fourth quarter fiscal results would be less than anticipated. Infineon CFO Sven Schneider joined Bloomberg TV just earlier today.
I would say from today's perspective, the indirect tariff guesstimate for this fiscal quarter is probably less pronounced than we thought last quarter. On the other hand, we are faced with more and more negative currency headwinds from the weakening dollar, which offsets to a certain extent.
Coming up, 11 Labs bets on AI music, launching a new service called 11 Music. We speak with CEO Matti Staniszewski next. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. Let's check in on those markets that just dialing back from some of the record highs we've been at recently. We're seeing the Nasdaq 100 down 0.6%. There's more of a creeping anxiety about the macro picture in the United States. That services data looking weak. Remember the jobs data that President Trump took issue with on the end of last week also painted a less than rosy picture about the economy. We take some money off the table as we digest also earnings. We're expecting AMD after the bell, but let's look forward as to also how we're seeing some companies still at record highs. Palantir doing the work today. We're up almost 7%. New record high after it's already climbed 500% in the last 12 months. This is their earnings managed to impress $1 billion in terms of revenue. We're also seeing global foundries, though, not such a pleasing picture. Look, they actually beat in terms of their fiscal quarter reported, but it's an anxiety around profitability looking forward, that midpoint of the range not met when it looks for their forecast. We're off by 9% for the contract chip maker, Ed.
Okay. Take a look at this chart showing the sales slump Tesla's posting in key European markets. These numbers come as Chinese rival BYD picks up sales steam in the region. I want to get out to Bloomberg Stefan Nicola to talk about this because it's an ongoing story. It's a trend that we've seen. Tesla in some European markets dropping off and China's BYD making ground. How would you sum the data we got most recently?
Yeah, I mean, Tesla has been suffering in Europe for the past few months and suffering in the key electric vehicle markets, Germany, the UK, France. Those are all markets that are rising in terms of electric vehicle demand. So, that's really bad for Tesla, of course. BYD, by contrary, is sort of making a big push into all of these markets. selling electric cars, but also hybrids. And and just in general, it's a really bad picture for Tesla. Of course, the company has a factory up and running in Germany, and it needs demand.
Yeah, Stefan, just try and weave the narrative for us, because Tesla wanted the narrative to be, look, we're moving to a new production format, particularly with the Model Y. That's what's slowing down perhaps some of our end results. But actually, it seems to be political connotations. It seems to be competition is the issue. Is that really what we're seeing here?
Yeah, there are a lot of factors at play here. The whole shifting to a new model and narratives is way too simple to explain this drastic decline. Elon Musk's political activities are certainly contributing to this sales slump, as are better models from rivals, better prices from rivals, but also just very shifting market dynamics in Europe, but also more broadly. So the overhaul of the Model Y SUV certainly plays a role, but it's definitely not the only reason for this really big slump.
Stefan Nicola, we thank you for painting what is an intricate picture. Meanwhile, we shift gears and we look at AI voice startup 11 Labs. It's launching a new initiative for businesses, stepping into the world of AI music. Customers can enter a prompt and generate a new tune within a matter of minutes using 11 Music. That's the name of the service. Joining us now is Matti Staniszewski, 11 Labs CEO. So what is demand like? You're doing voices, but what was the inbound? What scale are you seeing of companies wanting to create their own music?
Caroline, thanks for having me here. So at 11 Labs, we are doing AI audio research and product deployment. We are on a mission to be the voice of technology, build the most comprehensive AI audio platform in the world. And now this includes 11 Music, which we are extremely excited about because this is something that so many customers came to our platform to create a voiceover, to create the voices, to create narrations with our core models, but frequently needed that additional background sounds soundtrack in those productions, which we will now be able to provide as part of the service from creators all the way through the enterprises.
It's a fraught world where you're trying to navigate IP in particular. This is IP-protected music because you've already got the training of the models is based upon agreements you have. I'm thinking with Merlin Network, that's for independent labels. It's a digital rights agency. He's also got a similar deal with Cobalt Music Group. But what about the bigger ones? What about UMG? What about some of the other key music license holders? Can you make deals with them?
It's exactly one of the very special things about the release of the model is that it's both extremely high quality, one of the highest qualities in the market, while it's also fully licensed and built in collaboration with the labels, with the artists, with the publishers. Like you mentioned, we already are very happy to be working with Merlin and Cobalt, frequently referred as the fourth majors, both because they represent respectively 30,000 independent labels on the Merlin side and over 25,000 songwriters on the Cobalt side. So already that gives us such a high ability to create extremely high quality music. Of course, as we look into the future, we would love to work with UMG, WMG, Sony, and hope we find a path in the future to do so. As we think about our work across 11 Music, that's one of the key elements to make sure that the work we do is both licensed, but also gives you that broad commercial license to use it, which our enterprises demand from gaming all the way to media entertainment companies that we work with.
Matti, are you talking with and negotiating with those major labels you just named?
Currently, the focus was on bringing the current model and product to the market. So really, we're deep with our partners with Merlin, Cobalt, Source Audio, Landr, and a number of other partners that are mentioned in the release to bring the current iteration. As we bring the product to the market, iterate, we will see whether we can expand it further.
Matti, there's a lot of interest in 11 Labs in your business. To what stage have you grown? Do you have any financial metrics, ARR, or anything you can tell us about how it's going for you over there?
We are doing really well as a company. A few months ago, over half a year ago now, we crossed the 100 million ARR mark as a company, and we've been growing steadily since. across the company, we have really those two key offerings. The first one is that creative platform, which music will form in those early and initial days. And then the agentic platform, where we help companies create voice agent, conversational agents. And over the last 6 months, we just seen an explosion in companies building with both parts of the use cases, both on the creative and the agentic side, with now partnering over 1,000 different companies in the market and over 5 million creators that come through the platform on a monthly basis.
I want to go back to those creators, because can you name any individual musicians, for example, that are willing to go this way? I think of how Grimes has really lent into this, and she wants a 50-50 split with her royalties going forward. But what other musicians are you seeing actually wanted to adopt this? Because, as I say, it is fraught.
We are seeing a number of musicians in the space that are keen to lean into the technology, iterate quicker, make it a little bit easier to create music. Currently, as part of the 11 Music, we are still crafting the partnerships, and we'll hopefully announce some of those in the coming weeks. So cannot name any on that side just yet. But we've seen a wider set of creators working with the tools to make it easier to produce variations of the genres, make it easier to see how the tracks can be produced before hitting that production step.
Maddie, there's a lot of interest in you, and 11 Labs kind of fits the profile of this like vertical model where it's a potential acqui-hire target, right? I just wondered what you make of what's happening right now, the windsurf scenario, and whether you might consider doing something that, joining a bigger entity to continue your work.
We are building generational company, are planning to go independent and try to create and become the voice of the technology, make computers speak, make information accessible across voices, across sounds, across languages, and now music. So current default is to create a company that can create something special on its own, and we think we can. So hopefully the opposite will be true, where we'll be able to acqui-hire or acquire a number of companies in the space on that path to potential IPO in the future.
Mati Staniszewski of 11 Labs, thank you very much. Now, coming up on the program, M13 partner Brent Murray joins us to talk about the firm's new investment in the generative AI advertising space. That's next. This is Bloomberg Tech. Venture firm M13 has just led a $10 million seed round in generative AI advertising platform Context. The startup's now the largest and most well-funded Gen AI ad platform to date, according to M13. M13 partner Brent Murray is here to tell us more. This space is dynamic, right, because it's highly analogous with Meta. You know, a lot of the story around Meta is how their work in AI improves ad pricing, ad impact, that core business. You are looking at this a very different scale and early stage. I'd just love to get a presentation of the thesis and why this is an interesting domain within AI.
Yeah, thank you, Ed, and Caroline as well for having me on. So we are excited to announce the coming out of stealth of Context this morning, their $10 million seed round to really become the largest and most well-funded generative AI ad platform out there. And so to answer your question, our thesis on the space, well, we see the advertising world at a major inflection point. And I'm glad you hit on Meta. There's also industry incumbent Google that have pioneered a lot of the previous waves. We believe the first wave came sort of in the early 2000s when Google pioneered digital advertising as a space. Then shortly thereafter, a second wave came in the 2010s where social media platforms led by Meta attracted new eyeballs, new audiences online, and ad inventory exploded online. And we see this as a third wave. The $1 trillion ad market, 3/4 of which is done through digital channels, is about to migrate towards generative AI apps. You already see OpenAI is the fastest growing app of all time, closely getting to 1 billion users. And it's not just them, they're just the most well-known. You have a lot of other generative AI entertainment apps that are attracting audiences where Context is going to target them.
So Brent, what is Context's core competency? What is it that they're actually doing good at?
Yeah, there are two things. One is real-time ad creation, and the second is hyper-personalized contextual ads. So I'll take those in pieces. The first one, similar to what Mark Zuckerberg has hinted at where Meta is going, is end-to-end advertising creative, where AI and LLMs are powering much of not just the targeting of audiences online, but the actual creation of the advertisement itself, the asset, knowing what copy to use, what style, what color, the image, the video. So what Context has done is enable an ad to be created in real time using an LLM. If you are in a chat bot, then your ad will be served up to you in real time, which means you don't have to have a lot of wasted time on the ad creative, a lot of manual processes creating thousands of iterations. So that's the first thing. The second thing is contextual hyper-personalized. So in the old world, if you're on social media, I think that a great example is my family and I just had a baby. Any of your viewers know that the months leading up to a baby, the months following a baby, you are targeted ad nauseum by the social media platforms, because that is when you're most likely to purchase baby goods. But what happens after you purchase the crib, after you purchase the high chair, you're not going to purchase them again, but hundreds of dollars are wasted on you as an audience because they're targeting you as a demographic and a social behavior. Take that as what Context is doing is very different. They are targeting advertisements based on your real-time queries into the LLM. So if you are chatting through a chatbot, telling it what you're interested in, an advertisement will be created in real time based on exactly what you're asking.
I kind of want to go to the regulatory or unnerving part of this, because we're almost trusting these chatbots more than, say, the social media side of things. How do I know the chatbot's not steering me during my questions? How do I ensure that basically I'm not suddenly finding the conversation being bent a certain direction because it wants me, A, hooked in it, so we're worried about addiction process again, or indeed forcing me to then bend my will to end up buying something that perhaps I didn't need? How are we going to regulate that?
Yeah, that's a great question. And I think the advertising industry, because we're at this inflection point, will have to face a lot of those questions. Right now, you see of what happened with social media platforms in the past. Consumers are always hesitant to go on ad platforms like Meta or Instagram and just be served up ad after ad after ad. But then they become much better, and influencers started talking about things that you wanted to buy, and a lot of advertisers and online merchants rely on some of these ads to power their businesses, to stay in business. I think the advertisements in AI will have to follow the same suit. You have to be able to trust that the publisher or the chatbot isn't trying to steer you in the wrong direction. That will lead to unnecessary churn. That's the last thing that Context wants for their publishing customers. They want to create seamless environments where you're having a regular chat. The ad will be promoted or shown in a way that you can distinguish it from an advertisement versus non-advertisement, that it's not predatory or going after you in a certain way. But you'll see a very, very natural process where the chatbots are feeding you up things that you already want to see, already want to potentially purchase.
Well, Google already doing that in their third-party chatbots. It's fascinating. Brent Murray, we thank you so much for your time talking about Context, his partner over at M13. Now, let's talk about how women are holding more than 18% of all partner and above roles in venture capital. It's all according to data just released by Allraise. Now, it's a non-profit that aims to increase gender parity in tech and VC. And it's saying that this is ahead of its projected schedule. We spoke with Allraise CEO Paige Buckner about where that change can be seen most.
20% of decision-making roles at VC firms with $1 billion plus in AUM have women decision makers, which is super exciting. And so when you think about that stat, what's important to us is that we're making progress at scale. But we do know that at the mega funds, there are only 3 women holding managing partner roles. And so there's a big opportunity for us to make progress there.
And they're the funds with more than 10 billion in assets under management. Go back to the data, therefore, Paige, of what this means. Why is it? What is helping those that are managing in excess of 1 billion make those decisions, have more decision makers who are diverse in thought?
Yeah, so I think the first thing to ground ourselves in is that there's so much data, and we talked about this last year, that makes the case for having diversity in decision-making roles at any kind of organization. And this is especially important in venture capital when they are making decisions about the kind of innovation that we're going to fund in the private markets and then eventually in the public markets as well. So it's important for us to stay grounded in the results. And we talked about this last year, but what we know is that diversity is an advantage because diverse teams consistently outperform. They also better reflect where the market is heading. And one important data point that we've been thinking deeply about is the $100 trillion in wealth that's projected to move into the hands of women by 2048. And that's just going to reshape everything in the economy. But as we think about venture capital in particular, we've been asking, what does that look like for LPs? What does that look like for venture firms? What does that look like for the kind of innovation that these women are going to be able to fund?
So is the thought process here, more money lands in female coffers. They therefore want to work with more diverse LPs or allocate. The LPs want to allocate to more diverse VCs and they want to be putting money to work. How does that reflect in the portfolio companies that then these diverse venture capitalists and decision makers are putting money into?
Yeah, absolutely. So we know, according to our friends at Kaufman, that women VCs are 2 times more likely to invest in women CEOs at the earliest stages. And we know that there's opportunity there. And often these markets have been overlooked because they've been perceived as niche markets. But what's great is that when you bring in more diversity on the VC side of the equation, or on the LP side of the equation, by the way, that is felt across the capital stack. And then the kinds of innovation that we can have on the startup side of the equation shift. And so what gets funded then also better reflects the marketplace, which is, of course, commanded by women when we think about the percentage of decisions around consumer and healthcare and education that are made by women every day for households across this country. So it is really reflecting not just where the market is today, but where the market is going to be. And we're thinking about the products that are therefore reflective of the consumer that VCs really want to be building for because they're going to be able to get outsized returns.
That was Paige Buckner, CEO of Allraise. Now, coming up, investors eye AMD results after the closing bell. The latest earnings expectations coming up next, and the analysis from Bloomberg Intelligence. Stay with us. This is Bloomberg Tech. AMD out with earnings after the bell, and investors are putting increased pressure on the chipmaker, expecting the company to show benefits from the AI race. Here with more, Kunjan Sabani of Bloomberg Intelligence. You put a number on this market. NVIDIA has 95% of the market for GPUs used as AI accelerators. AMD has 5%. What do they need to show us that they're making some ground?
Well, this time around, the non-AI things will be important. PC gaining share, some maybe tariff pull-in, embedded coming recovery in 3Q. But as you said, the second half AI ramp, both in server CPU and GPU, will matter the most. They need to, again, show sustained execution on the 355 ramp. There's a possibility of the China series coming back and adding about 500 million to even more revenue in the second half. And any visibility into the Helios, which is the next year server-level rack solution, should be very positive.
Where have they been executing really well? Because I feel like time and time again we're hearing about the PC side of the equation, but the consumer isn't too hot right now.
Definitely the end markets are struggling, but they have been really gaining share on CPU, both on the PC and the server, which has really been helping them outperform even the unit weakness in the market. Secondly, we have heard news about them raising prices both on the PC, the server CPU, and the GPU side. That really speaks to the strength of their adoption across the board.
Wow. Plenty to watch out for in terms of size of market application. Kunjan Sabani of Bloomberg Intelligence. Some great notes coming out ahead of these earnings, and we'll analyze them after the bell as well. That does it, though, for this edition of Bloomberg Tech. Ed, so much to be digesting in terms of the market.
Yeah.
There's the macro pressure, but we look at AMD after the bell in terms of the micro perspective.
Yeah, another day where chips are in focus because of policy. But like AMD, best performing chip stock so far this year, right? And they have a lot of pressure on them. But it's an interesting company to follow. Good analysis from Kunjan. Recap it, as Kara said, on the podcast. You know where to find it. It's on the Bloomberg terminal, as well as online on all of those great platforms, Apple, Spotify, and on iHeart. From New York City and San Francisco, this is Bloomberg Tech.